All right, so Infosys just dropped its Q4 earnings, and on paper, the numbers look absolutely fantastic. But there's a really interesting paradox hiding under the surface that sent the stock tumbling. So let's dive in and figure out what really spooked the market.
I mean, first off, just look at this number, a nearly 21% jump in net profit compared to this time last year. For a company as huge as Infosys, that is a seriously powerful result. It's the kind of thing that should have champagne corks popping, right?
So you see a number like that and you think, okay, simple story. The company is making a ton more money. The results look great. But here's the twist. The second this news hits the street, the stock drops by about 5%. So what on earth did investors see that wasn't in that big, shiny headline? That's the puzzle we're going to piece together right now. Okay, to really get what happened, let's start with the good news. Let's build the case for why this should have been a blockbuster day for Infosys. Let's look at all the evidence that was pointing to a huge win. Well, first, the top line, revenue. It grew by a really solid 13.4% compared to last year. So not only are they more profitable, they're actually bringing in significantly more cash than they did a year ago. That's a definite check in the win column. And check out the momentum here. We're not just talking year over year. Their profit shot up almost 28% in just the last quarter. That tells you they finished the year incredibly strong, probably getting way more efficient. And this wasn't just some flash in the pan either. If we zoom out and look at the whole year, the picture is just as good. Net profit for the entire fiscal year, up over 10%. Revenue, up by almost the same. We're talking about steady, solid growth, not just one lucky quarter. And get this, on top of a great year, they've basically pre-booked their future success. They signed nearly $15 billion in new deals over the last year. That's a huge pipeline of work just waiting to be done, which means guaranteed revenue down the road. So far, everything looks perfect. So if everything in the rearview mirror looks so good, what's the problem? Well, here's the thing about the stock market. It doesn't care about what you did. It cares about what you're going to do. And as soon as we start looking forward, that's when we start to see the cracks. And boom, here's problem number one. Remember that awesome full-year deal number? Well, the most recent quarter, not so awesome. New deal signings fell off a cliff, dropping by a third from $4.8 billion down to $3.2 billion. That is a blinking red light for future growth. Then we get to the really big one, the company's own weather forecast for the next year. Infosys basically told Wall Street, hey, expect us to grow somewhere between 1.5% and 3.5%. The problem? Everyone was hoping for 2 to 5%. When you guide that low, you're telling investors to brace for a slowdown. And then there's this. In just 3 months, Infosys shed over 8,400 employees. Now, sure, that might help profits in the short term, but a cut that deep makes you wonder, do they just not have enough work for all those people anymore? And this is where the story gets kind of weird. You see, normally, a company cuts jobs to become leaner. But at the exact same time Infosys was laying people off, a whole bunch of other employees were just quitting on their own. This voluntary I quit rate, what they call attrition, actually got worse, climbing to 12.6%. Think about that combination. You're firing people, but the people you probably want to keep are also walking out the door. That's a huge warning sign about what's going on inside the company. Okay, so let's recap. We've got a great past, but a shaky future. Now let's zoom out. How does Infosys stack up against its competition? And what about the big, scary threat that's looming over the whole industry? You know what's funny? When you put Infosys side by side with its biggest rival, HCL Tech, it's not even a contest. HCL's profit actually went down. Infosys's grew by 10%. Infosys has better margins, better growth. Heck, even its stock didn't get hammered as hard. So in a really tough neighborhood, Infosys is still the best house on the block. But the real fear here isn't another company. It's AI. The entire IT industry has taken a beating this year because investors are terrified that AI is just going to learn how to do all the work these guys sell. This isn't about a bad economy. It's about potentially becoming obsolete. All right, so we've got all the evidence now. The good, the bad, and the ugly. Strong profits today, but a weak forecast for tomorrow. The best player on a team that might be playing a dying game. So let's line up the arguments. To buy or not to buy. Okay, the case for don't buy. It's pretty straightforward, right? Their own forecast is weak. New deals are drying up. People are leaving, both voluntarily and not.
The whole industry is under a dark cloud, and there's this huge risk of a value trap, where the stock looks cheap, but it's actually a falling knife.
But then, there's the case for buy. And it's just as compelling. Let's not forget, this company is still growing its profits. Its margins are the best in the business. They've still got that massive $14.9 billion pipeline of work to get through. And now that the stock's been beaten up, the pros think it could bounce back 40, maybe even 50%.
So, where does that leave us? Well, the final verdict from the analysis is a cautious buy. Basically, the company is fundamentally stronger than its competitors. If you're an investor who can handle some turbulence and you're willing to wait a year or so, the price right now looks pretty attractive. The key advice? Don't go all in at once. Maybe just accumulate on the dips.
And all of this really boils down to one huge, overarching question. This isn't just about Infosys' quarter. It's about this. In a world with powerful AI, is the entire way these IT companies have made money for decades becoming obsolete? That's the multi-billion-dollar question that hangs over everything.